What are the opportunities in the current market in light of the many challenges that lack of credit and weak economic demand are creating? The first opportunity is obviously that away from prime assets, there's very little capital for real estate. So for the first time in a very long time, there's simply an opportunity to purchase assets at a much more attractive relative pricing than has been the case in recent memory. And by that I mean the last 10 to 15 years, certainly. Secondly, there's an opportunity to participate at different places in the capital structure and earn excellent returns in all of those places. So debt is now better priced, and for people who are looking for safety, the opportunity to participate in first mortgages, I think, has become very attractive, and potentially on a risk-adjusted basis may be one of the most attractive opportunities out there in the current market, because spreads are historically very, very high, and together with fees and the fact that your capital recycles, that represents an excellent income-oriented opportunity. Income assets themselves, high-quality assets in the best gateway cities in Europe, I think are actually expensive at the moment. If you have strong capital and a long horizon, then buying assets at 18 to 22 times cash flow may be okay. But if you have anything other than the longest of horizons, I'm not sure that's the best opportunity. And compared to the opportunity to, say, be a lender, for half the risk, the same return is a much better opportunity. Staying in the debt space, in addition to the opportunity to lend senior money, by which I mean really first mortgage money, there's also the opportunity to be a mezzanine or second mortgage style of lender. And there, returns can easily reach 10, 11, 12% plus fees. And so from a traditional real estate return point of view, again, you're looking at probably the center of what one could expect to earn long-term from real estate for taking less than equity risk. The equity investing space, by which I mean being the purchaser of everything from single buildings all the way through to structured transactions or companies, or making larger investments in portfolios or distressed securities, all of those represent opportunities, but of course very much dependent on what your appetite is for risk. There are opportunities across asset classes and across geographies. They do vary a lot. We're invested for the moment in office in Germany. It's probably trading at as actively and as aggressively as it has for some time. That said, clearly the German market for the moment feels like one of the stronger economies in Europe with more potential for growth. Conversely, Italy and Spain have become extremely illiquid and are probably not for the faint of heart from an investing point of view. At the same time, if those markets start to stabilize and correct from a capital point of view, investments in quality assets in those markets could yield excellent returns over the medium horizon.